It seems to me like a strong beat both on the top and on the bottom line.
Yes, we're seeing profits and revenue beating estimates, pre-tax profits, as you said, up almost 10% in the third quarter, and revenue as well beating forecasts by about $1 billion. We're likely to see the stock move after markets reopen from the lunch break. That shares repurchase of up to $3 billion, likely to be very positive for investors. And we were hoping to hear a little bit more details about that restructuring plan, because this was just days after the company unveiled this huge restructuring plan, merging its investment banking and commercial banking divisions, and also carving out its UK and Hong Kong operations into standalone units and folding the APAC and Middle East into a Eastern regional division. So we're hoping to hear a little bit more details on that, but the company has reiterated that it will provide more elaboration on that only at its annual earnings report that's expected in February next year. And reining in costs, that is really key, given that profits are likely to be more or less stagnant given the rate cutting cycle that we are seeing, and operating expenses that was still up by 2% in the third quarter. Year to date, the first 3 quarters so far is up 6%. So more still needs to be done if the company wants to meet its cost guidance of 5% growth this year. So that's something to watch very closely. We might get a little bit more of the impact showing up in the final annual earnings.
Yeah, and a couple of interesting points you raised there, especially on the cost front, given that they have guided to 5% cost growth for next year as well. And then vis-a-vis those organizational changes, they're not going to be implemented until January 1st. So we still got another quarter to get through before those synergies that you speak of start coming together. Let me just ask you, though, they've also announced a $3 billion share buyback. How is that likely to move the needle on the stock?
Well, definitely it's going to be positive for the stock. We might see the movement at the top of the next hour. Investors have been watching this very closely, especially given the new CEO has taken over, whether these restructuring, the cost-cutting initiatives is really going to be bearing fruit, if it's really relevant for the organization, or if it's just, the CEO trying to make its mark, but not actually really quite changing things on the ground. So that's something to watch very closely. As you said, it could only show up next year in terms of its impact on the company's bottom line, but certainly the huge share buyback, $3 billion, and the better than expected earnings report overall, that's going to be quite positive for the company stocks.